So I'm going to call the meeting to order. Let's, I don't know, I guess, should we start with saying, making sure we know who's here? I know I'm going to deal with committee members and then ask trustees to identify themselves, then auditors, and then everybody else who might be on. Does that work?
Mm-hmm.
Okay, so I'm on, and Dave Silverman, I see you as a committee member, and Megan, you're here as a committee member, and Lynn Dickinson is here. And is Karen, are you here yet? No, okay. And then other trustees, I see Church Hines, and then I'll ask other trustees who might be on to identify themselves. Ryan?
And
Peg.
Peg.
Oh, yeah.
I see Peg, yeah, thank you. Okay, and then I think that's all the trustees I see. How about us staff? Starting with, we'll start with Sophie, our interim chancellor.
Yes, I'm here.
Todd Delos,
Thanks,
interim
Todd.
general counsel.
And Steve, I see you're on.
Yeah.
How
I've asked Linda, 3 members of the finance team to join the call. I was actually going to introduce them as part of O'Connor and Drew's audit review in
Okay.
response to one of the questions, if that's okay. Otherwise, we can introduce
Yes,
them now.
no, we'll wait till then.
Great.
That's fine.
Thanks.
That's great. And then, so how about our auditors? How about you share with us? Is it just you, Keith?
Nope. Keith Goldie, O'Connor and Drew, partner. And then I also have Christopher Evans, who's the audit supervisor on the engagement as well.
Hello.
Thought that Christopher was an O'Connor or Drew staff. Okay, and so other, I see there's other Vermont State College, there's presidents and business officers. Oh, from colleges and stuff on, you want to just make sure that we know who's here, please?
Hello, this is Wayne Hamilton. I'm on, but on audio, but I don't see my video showing. Sorry.
I can see you, Wayne, and I could hear you.
Okay,
Thank
great.
you.
Thank you.
Joyce Judy from CCV is on.
Jonathan Spiro, present. Caston is on.
Elaine Collins from NBU is on.
Littleton Tyler, Dean of Administration at Vermont Tech, in lieu of Pat.
Sharon Scott, Northern Vermont University.
Laura Jacobowski, Castleton.
Brenda Flynn, Associate Controller at the OC.
Yeah, I think we've got everybody that way, at least that I can see on the screen. So meeting is called to order, and first item on the agenda is approving the minutes of the February 3rd Audit Committee meeting. Is there a motion?
So moved to accept.
Thank you, Lynn. Is there a second?
Second.
Thanks, Dave. Any comments, edits, changes? Then all those in favor of the minutes as presented, please indicate by saying aye.
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 Any opposed? Any abstentions? Thank you. The minutes are approved as presented. And the next and most important part of the agenda then is our review of the 2020 audit plan with O'Connor and Drew. Steve, do you want to start on that, and then you can decide? If you don't want to start, then just turn it right over to Keith.
Well, no, thank you, Linda. I appreciate that. And Keith, I will turn it over to you. But what I thought I would do is, if you wanted to just briefly discuss as you were walking through the agenda, some of the items, and prominently featured our changes to staff and leadership. And so I thought we would recap those both for your benefit, but also for the benefit of the trustees.
Yeah, and so am I understanding you want to wait until we get to that then, or would you like to do that right now, Steve? And then that will take care of at least that item which is on Keith's agenda.
Sure, and maybe I can do
At least
that
the
now.
staff updates, maybe.
Yeah. So, and I was looking at page 8 of the board materials, which starts the 2-page agenda that Keith had provided. And with respect to staff, I'm kind of jumping a few rows down, but as folks know, Sheila Evans, who had been our system controller and senior director of financial operations for the past 4 years, and also in charge of all of the audits since fiscal 17's, did move on to another opportunity in February. And so since that time, we have reconstituted the organization of the Chancellor's Office finance team. And so by way of introduction, Wayne Hamilton, who is a familiar face to a lot of the people who've worked here for a while. Wayne most recently was the Dean of Administration at Lyndon State College. I think Wayne for 14 years or 16 years. It was reasonably long tenure.
I remember
And then-
when I was first on the committee, first on the board, he was there at Linden. Yep.
Right. And he and I both had the pleasure of, working with Sheila very closely. And then prior to that, Wayne was actually the system controller at the central office. And so he brings a wealth of experience. He actually was recruited out of retirement to help us through, and then has agreed to stay on board for a while, and at least through this year's audit, and then longer if we can keep him, to serve in the role of interim system controller. And then Brenda Flint, who had kind of immediately upon Sheila's departure, stepped up in an interim controller role from director of business operations, has now permanently, taken the role of associate controller. So really the number 2 person in the financial operations team, and playing a key role in a lot of areas. And Brenda has just basically been the grease and the glue that's held this operation together since Sheila's departure. And Brenda, thank you very, very much for all your continued hard work. And then we have a relative newcomer who joined us in February, I believe, and I don't know if she's joined the call, but Jocelyn Haley joined us as the replacement of Leah Collins, who was another longtime employee and staff accountant. And Jocelyn joined us as a senior staff accountant, but the reality was she was also the controller at her prior organization. And so she brings a wealth of not-for-profit experience running audits, experience with federal grants administration. And so we have asked Jocelyn, and she has accepted, assuming sort of a promotion within the organization to Director of Financial Operations. And so she is now going to oversee grants administration and payroll. And Jocelyn will also take a key role in the audit. So whereas before, yes.
I know prior to going to the Sustainable Communities, the last nonprofit, she actually had worked with Mudgett Jeanette. So I know that Jocelyn also has audit experience, and I know Jocelyn and think highly of her. So good hire.
Yeah. And then that's, again, wonderful to hear. And thank you for reminding me of that part of her resume also. But a lot of this is for Keith's and Christopher's benefit in that, this year we're going to take a team approach to getting the audit done. And of course, we'll be relying heavily on our colleagues at the campuses as well. So anyway, that is the team, Wayne and Brenda and Jocelyn. And we look forward to working with you. I guess just to jump to the leadership then, because there's sort of a question about staff and then a question about leadership, as I'm sure you're aware, but worth reiterating. So, former Chancellor Jeb Spalding resigned on the 29th of April, and General Counsel Sophie Zadatny was appointed as what we're calling short-term interim chancellor, while a permanent replacement can be found. And as I understand, Sophie is a candidate for that role as well. And we're hopeful that, and I'll defer to the board chair or to Sophie to correct any of this, but that we're hopeful that a more permanent interim chancellor can be identified within the next several weeks. And then in the meantime, while Sophie is serving as interim chancellor, Todd Delos has been elevated to the role of interim general counsel. And then I think the last leadership change of note is that Dr. Karen Scalfaro has resigned her position as president of Castleton University. I believe that was effective as of the 31st of May. And so Jonathan Spiro has taken over as the interim president of Castleton while a search can be conducted. And Jonathan is a longtime professor, dean of academic affairs, department head, and bleeds Castleton green, as we like to say. So I believe that reiterates all of the staff changes, all of the leadership changes, but I'll pause here and invite anybody else to remind me of some that I may have forgotten. Okay, and then hearing none, Keith, at this point, I will turn it over to you. But if there are any questions that you think beneficially could be addressed as you're going through the agenda, then I'll take a first stab at them and then rely on others to help me where there are deficiencies in my memory.
Okay, I appreciate it, Steve. Thank you. First off, we always like to say thank you to the board, to the staff, to Steve and management for allowing us to come back this year. This is going to be a challenging audit year, notwithstanding, everything else that's going on, but like Steve reiterated, Sheila moving on and some other key management positions, where Sheila sort of had a very hands-on in all aspects of the audit and sort of ran everything. She was very, independent. So there's, like Steve said, that it sort of takes a team to replace her. That's a challenge. And then on top of that, everything else that's going on sort of, compiles upon it. So this year, we want to go through some of those things to give the board an expectation of what we're expecting and what we're seeing. And also, how do we, work through some of these challenges? I don't think they're impossible. The one thing I wanted to discuss was last year's audit results. We had a clean audit last year. I think it was a very efficient audit. One thing that I think helps us this year is last year we did complete a significant portion of last year's audit remotely. In order to save a little bit of time and a little bit of money on everybody's part, we did a significant portion, from our office through the portal, that sort of thing. And, thankfully, that really sets us up this year for a little bit of not having to go through those learning pains. So far, just to give everybody an update where we're doing is we're starting audit planning now. This is actually the first day. And in the previous few weeks, we've made our requests. We've gotten all the stuff remotely through Brenda, through Wayne, through Steve. And all that stuff has worked. And it's worked through the way that we've worked through the last time, which is make the request, give them time to pull the stuff. Everything gets uploaded to the portal. We'll take a few days to go through everything and then start approaching the individuals at each college with our questions, with our discussion items. So that's going to be the plan for essentially the 3 to 4 weeks in June. Is these next 2 weeks, we'll go through all the support documents, kind of collect our thoughts, and then approach everybody with thought out questions, discussion points, additional requests, that sort of thing. And that's why we ended up deciding to do it remotely last year is, being on campus, you sort of had a little bit of time to go through stuff and then sort of pepper everybody with your questions. So allowing us time to go through everything and sort of see the full picture and then approach people with our questions allows us a little bit more drawn out time to see the big picture and to see everything. So thankfully last year's audit really set us up, I think, to succeed for this year, especially with everything that's going on. And like I said, it's this year, I think the challenges can just be overcome through good communication and good planning. And I think that's our approach this year is have constant communication with those specifically at the college, the VPs, the directors of financial aid. These are the people who have to deal with us the most. And our plan, like I said, is to look at everything, get our thoughts in order, and then have, you know, meaningful discussions about areas that we're concerned about or we need further guidance on. And like I said, that's where we're gonna, you know, do our best to, you know, not waste people's time, not make it inefficient by communicating constantly. Maybe we always feel it's better to communicate too much than too little, and go through everything, and that's sort of our approach this year. And last year,
So,
because
Steve,
of that,
just a minute. Am I understanding you really are planning to do it all remotely?
at least for the planning phase. Now, when it comes to the fieldwork phase, we'll sort of have to get a consensus of, you know, where we are at that time. But for the true planning phase, yes, our intention is to do it all remotely. Like I said, we've already made our request. We've gotten our support materials through the portal. We're starting to look at those. And then as far as discussions, we'll set up Zoom meetings, conference calls, email, whatever works for people. You know, and when we have a longer period of time, we're looking at all of June instead of the whole, you know, we have a weekend, you know, a week on site and 2 days to speak to people. You know, that allows us a little bit more flexibility. And so we've told people, we'll work around your schedule, we'll work around what you have going on. And as long as we get those meaningful conversations about what we need to get our stuff sort of, you know, finished and in order and organized, then, you know, for our purposes, we can take more time. But our plan is, yes, for the planning phase, even through conversations with the financial aid directors and the VPs, is to do it all remotely for this period. And then when fieldwork comes, we'll have to readjust what happens. You know, for our purposes, you know, we're very flexible. It really comes down to, you know, your staff and your feelings of how you feel about having outside people in your own office and that sort of concerns like that. Really, the significant work that goes around this is really centered around the single audit, which is really the audit of the federal aid. Based on prior year's results, that's really where a lot of the comments were, and they weren't significant comments. They were sort of the minor comments that come along with every federal audit. You know, the minor, you know, reporting things. You got 1 out of 30 that you missed on, that sort of stuff. You know, the single audit is very technical, and that's where a lot of the hardships come with. Is it requires a lot of, you know, minute reviewing of documentation and a lot of you know, back and forth with questions and understanding and things like that. So that's where the significant, you know, hardships of this is. And I think, like I said, that can be overcome through, you know, meaningful conversations, being very efficient and not wasting people's time with, you know, not seeing the whole picture, giving us time to look at things, and then we can have a better conversation or question about what we need to essentially get us where we need to be. So like I said, last year's audit was clean, it was efficient, and like I said, a big chunk of it was done remotely, which I think sets us up for, you know, success this year as a good starting point. And now we have to sort of take it from, I'd say 80% remote last year to pretty much to 100%, at least for now, for this year. Some of the
We
things
do have some new things that happen this fiscal
we do.
year.
Yeah, so now we have to sort of address the new stuff. Significantly, we take into our audit plan the changes in management. You know what I mean? Ultimately, we're feeling that the internal controls haven't suffered because of it, but we do have to address it and make sure that, like I said, Sheila was a very organized, you know, detail-oriented person who oversaw a lot of things herself, and we just have to make sure that her responsibilities have been disseminated over multiple people, and that there haven't been any losses of checks and balances because of her transition. So that's one part of our audit plan, is to make sure that aspect of it hasn't suffered, you know, because of the transition. The second aspect of it is the new payroll system. You know, that went online this year as well. So that's a new function that we didn't really get to account for last year. We'll have to account for this year. The internal audit was supposed to have a chance to sort of address that a little bit and give us a little bit of comfort with it. And unfortunately, because of everything that went on, it hasn't. So we're really going to have to rely on just our work, which is fine. We're really capable of that, but it just one less piece that is always a nice, comfort level to have. We don't have this year. So our audit plan will center around changes in management and the new payroll system significantly. And then also, this whole coronavirus thing, working remotely. You guys as a system are set up to work remotely. So I don't think a huge impact with the way you disseminate information and approve of things is built on a remote approval system. So I don't think that has suffered. But again, working offsite always comes with challenges. So we'll have to take that into consideration as well and make sure that no internal controls have suffered because you're not down the hall from each other or things like that. Now, in addition,
Can we just pause for a minute?
Sure.
Does any of the committee members have any, or other team members have any questions or anything at this point over the internal controls? I don't see any hands. Okay, great. Go ahead, Keith.
No problem. So, like I said, our plan right now starts with assessing the internal controls, cash receipts, cash disbursements, payroll being a significant portion of it, to then make sure that that affects our audit plan, and essentially our audit is based on a risk-based approach. We wanted to pay attention to those areas that are more inclined to have errors, mistakes, estimates, judgment. Those were usually centered around accruals, because those are the types of things that you estimate, not so much cash, fixed assets. We do look at those things, but generally those items you can either confirm those with a third party, so there's less risk there when you're looking at stuff. Generally, the stuff that's really risky is the stuff that you're basing on a third party, like the actuary, the OPEB. We look at that because there's a lot of variables that go into that are really, one small change and all of a sudden you're off $2 million and everybody's, it's all crazy. So
now this year with accruals, I'm thinking, will some of that impact the revenue recognition because of the room and board refunds and issues like that? So will that, revenue recognition is typically a critical audit area anyway, and that might in fact be accrued because we might not have paid those out at June 30th. I can't.
Correct. So this year, specifically to the coronavirus, we have to take into account your different, not business model, but just the differences when you're going to compare to last year. Is you've significantly made a lot of refunds. Now, whether all those refunds have left the door or not, we have to confirm and make sure. But otherwise, you have to make sure you're showing those as a refund or a payable back to the students. The second part of it's going to be around the CARES Act. That's another one that we'll have to think through and talk through. Some of it is for the students. I know that's the first piece of it. Phase one is essentially you get the money from them and then you can give it back to the students. The timing of that, has that all been taken care of by June 30th, or is there going to be some lag time, associated with that? You might have a receivable from the federal government and a payable to students, that sort of thing. So we'll have to work through that to see, what aspect of phase one we're through. And then phase two is essentially money that you as the university and the system gets to keep to cover, COVID-19 related expenses, whatever that means. They're still working on, expressing what that actually means. And where
just pause there, Keith. Steve, have we refunds will probably many of them be accrued. Is that right for students, or have we started paying out refunds?
So as I understand, we'll start paying out refunds within the next week or so. So we did, manage to postpone those until June. But I was thinking about CARES Act, but I guess, Keith, another big thing or series of big things relates to then legislative support. And
Yep.
so right now, when I saw your note on your agenda about significant transactions, I was kind of thinking, okay, things that are 7 figures or more. And so the room and board refunds in aggregate are about, 5.1 million. The CARES Act is about 6.1 million. It's about 3 million student and about 3 million sort of institutional. But then there are a number of pieces of legislation from the state, whether it is providing, state general fund support, or as I guess we could call it, a pass-through of federal Coronavirus Relief Act funds to the state of Vermont that are then being provided to the colleges. So, maybe just to recap them here, both for the trustees and for your benefit. One item is the state's Budget Adjustment Act. It's actually a supplemental Budget Adjustment Act. There have been two this year for fiscal 20. As we understand, that is now passed out of both houses of the General Assembly with $12.2 million for the state colleges. The source of that is entirely federal coronavirus relief funds to the state of Vermont. And of that 12.2, 5.1 is earmarked specifically to offset our room and board refunds. But then there is, another close to 7 million that is, to Linda's question about, well, when are we going to accrue that? When do we pull it down? When does the bill pass? When do we pull it down? And then when do we actually expend the funds? So that's just that first Budget Adjustment Act. Then the state is working on, as we understand, two different pieces of budget legislation. Normally we have one big appropriations bill, but given all of the coronavirus induced uncertainty, given that the tax filing deadline has been postponed 3 months, the state is actually going to take two passes. And I'd actually, if there are any legislative trustees, they should correct me on this, but we're passing both what they're calling the skinny budget, which is for the first 3 months of the fiscal year from July 1 to September 30. And then instead of the legislative session adjourning in June, we understand it will be recessing. And then the legislature will reconvene in August to work on the rest of the budget for the trailing 9 months, and I suppose any true-ups in the first 3 months. And so those are two other legislative vehicles to potentially provide funding to the state colleges. As I understand, the skinny budget is moving very quickly, and I hadn't actually seen that it had a bill number attached, but that could both provide a quarter of the general fund appropriation to the colleges, and then additional coronavirus relief funds up to maybe $15 million before the 30th of June. But again, that's all still in the works. And then I imagine we wouldn't know, I guess the second then budget bill would not fall until fiscal 21. So I don't know that that would impact this audit. So maybe it's only two pieces of legislation, the Budget Adjustment Act, which still needs to be signed by the governor, and then the skinny budget that would impact us for this fiscal year. And I'm sorry, Lynn, I saw you.
Yeah, the other thing that is in there is the bridge amount of money, the 25 million that has been discussed, and that may be its own separate bill. And I suspect that's waiting for the report from Jim Page. They're in, I think, the closing pieces of doing that with the treasurer, and he should have something within the next week or two. But I think that might be a separate bill entirely, and I would hope that would come in very shortly, because I think we're going to recess in June and then come back maybe very late August and September, because there won't be any numbers for 2020 until after the July 15th dates. Probably not for the Joint Fiscal Committee or the people who do the work for the legislature and the governor until maybe close to September 1.
Okay.
Their
So I
projection.
think that's potentially 4 bills then, 3 of which could actually be signed before the end of this fiscal year, and therefore pertinent to this audit. And then that fourth, trailing 9 months of fiscal 21 will be outside of this audit period. But at least 2 of those are still up in the air, and the third, the Budget Adjustment Act, still needs to be signed by the governor. So is that that may have created more confusion than elucidation, but just as a heads up, there's a lot of transition.
It's something they need a heads up on,
Right.
all of it.
Right.
Yeah, that'll be a big part of it. We'll have to look at it. We'll have to look at the timing of the bills when they're signed, what periods the legislation talks about it applies to, And then also, like you said, when is the expectation of drawdown to determine which period it's going to fall in. I agree. If a lot of it's signed before June 30th, and it seems like it applies to the 2020 fiscal year to help supplement some of those losses, then most likely to be in that period. And then anything for future continued support will most likely fall into next year or the year after, depending on how long, that period lasts. But we'll have to look at that because you don't want to recognize revenue in the wrong period. I think that also sends the mistake you want to avoid is recognizing income in the wrong period. But you also want to get a good matching principle, which is when were the losses, when were the revenue, to try to offset some of that stuff. So we'll have to spend some time looking at that and talking about that. So I mean, there's a lot of challenges this year, and a lot of, I don't know what the balance sheet and the income statement is going to look like. I hope with some of this supplemental appropriations, it'll not look too bad on the bottom line, but your categories, who knows what they're going to look like. And this year is going to be a tough year. And as far as looking for consistency and helpful financial information, we'll have to sort of talk about presentation wise. Is there additional information we can provide in the financials through the MD&A or something along those lines that helps a reader really understand what happened? I think this year the MD&A is going to be very significant. That's where you sort of talk about in layman's terms what happened and what it really means to the school and the future. So I think when we get to that point, you'll have to spend some time really talking about, especially if the financial statements themselves are very confusing because you have a whole bunch of appropriations and very little student revenue. You'll have to talk about, okay, how do we then decipher this for the reader, and make people aware of what it really means, that some of this money here is really an offset here, but I can't just move it around because that's not the way they let us do stuff. So that'll be a certain number of challenges too. And then like Steve and I have already talked, to the financial statement preparation is always a challenge. Sheila did it for 4 years. She was very good at it, and we just have to make sure that process is able to be picked up by someone, whether Brenda, Steve, us. I mean, we're here to help too. But like I said, that transition isn't always easy. You don't want to get caught up in September and August, and all of a sudden be like, oh, we need somebody to start, prepping statements and footnotes and MD&A, and it's a lot. It took her weeks to do. So we'll just have to make sure we're constantly talking about the timing of it. And like I said, not only is this something, but you guys have a lot of other stuff to deal with that we want to make sure it doesn't all start to pile up and become, overbearing for somebody. So we've talked to Steve about, our ability to help in certain things. That doesn't impair our independence as part of the audit. And we'll have to sort of continue to have those conversations as things sort of settle down and we get to a little bit of normalcy. We'll have to see how, everything else comes back and things like that. So we talked about the transactions, the audit timeline. Like I said, our plan is
one other, there was a refinancing, the February 2020 bonds through the Vermont State Colleges, Steve?
Yes, thank you. Boy, it's like ancient history now, but yes, on February 6th, we closed a refinancing of our Series 2020 or 2010B bonds. And that was a pure refinancing savings. There was no, restructuring of debt, and it saved about $5.4 million. The savings was concentrated in the first 4 years of the transaction, just the way that the payment of principal and interest in the new bond issue was structured. And then just as sort of an aside, the 2010Bs were a Build America bonds or BABs issue that required semi-annual submission of what's called IRS Form 8038 CP to get a pretty substantial, like $350,000 interest subsidy. And that was kind of an intensive paperwork process. It wasn't intensive, but it was just one more kind of tag end that we've been doing for the last decade. And with the refinancing of those bonds, we no longer have that potentially, slip through the cracks administrative item. And candidly, we don't have counterparty risk to the federal government, because shortly after that bond issue was closed and a 35% interest subsidy was anticipated, the federal government went right back and started cutting that subsidy amount. So all of that has been cleaned off the decks. The new 2020 bonds are just plain vanilla tax exempt fixed rate bonds.
And just, Keith, I don't think this matters to you much. They're solely the obligation of the Vermont State Colleges. They're issued through the bond bank as a conduit debt. And so they don't even show up in the books of the bond bank.
Oh, okay. Okay.
Right. Yeah, these follow an identical credit structure to the 2017 bonds in that they do have a state intercept mechanism. So.
All right, good. Nothing else? No other big surprises?
I think those are the big ones.
I don't have any other notes here about big surprises. Those are the things I had notes on.
Top of everything else, a little bit of refinancing. Nothing wrong with that. No, so like I said, the significant items we talked about, that's a big audit focus. The changes, our timeline essentially, like I said, for the month of June is essentially audit planning. We're going to take the next week, 2 weeks, do our stuff, set up calls ahead of time, so we're not just calling out of the blue for people at the college, and try to work on your schedules. If it has to wait a week, we're fine. We can do that. Our plan is essentially to get audit planning completed in, June, and then have a final thought process of where the audit plan is going to take us by July 15th. So that way we understand in August and September what essentially is going to happen. For audit fieldwork, we have some dates, essentially August 15th, August 28th, the same consistent weeks as last year. Now, whether they're on site or remote, I mean, that's essentially is less of a concern right now, but essentially we spend those entire 2 weeks, week and a half, 2 weeks with the people at the chancellor's office, because essentially they coordinate the entire audit plan. And there's less of a requirement to meet with each of the individual people at the schools, as long as the audit packages are all done and essentially brought together. So that would be the same expectation. But again, as things change, we're flexible enough where we can adjust and adapt to whatever the needs be at any time. I don't know if there's been any discussion yet, but as always with everything that's craziness, if the state's talked about extending, their deadline of October 15th for the financial statements, that would give us a little bit more time if we needed. Like I said, as you guys get back to normalcy, if there's so much other stuff that needs to be attended to, we can always talk about the rescheduling of whatever needs to be just to make sure we meet the state's deadline. That's ultimately, the goal is just to make sure we meet their deadline. The last time that came up was with was it Hurricane Sandy, I think it was, or Irene, where everything got flooded out, but we still were able to meet the deadline. Like I said, we'll do whatever we need to sort of, make it work for everybody.
Steve, I don't know if you've heard anything from the state. I know only at looking at towns and government audits, state and schools dealing with the Agency of Education, there's been no suggestion yet that there's any delay in time deadlines for them. Although, of course, we've heard from the feds that there is an extension of time for getting in.
I believe I brought this up with the state treasurer a couple of weeks ago. She had not heard anything, but I'm also thinking that the time pressure or the appearance of the difficulty getting financials done October 15th may manifest itself over the summer. I just don't know that folks have focused on it yet, but I have not heard that there's any intent to delay that deadline.
So we'll watch that, and like I said, as more information comes in, we'll talk and readjust if necessary. But again, we won't push off just to push off. We'll push off around what makes sense to get everybody work done in a timely manner. The other big thing is always the single audit. Now that on top of itself has really been, adjusted with the CARES Act. That is federal aid. So what we've been told so far, now this is constantly changing, so we're sort of just constantly keeping our ear down and listening to what is being said. The student refund portion is obviously federal aid, and that's going to be on your schedule of federal expenditures, your CFA, which is what we audit. So that's part of the audit. So depending on the timing of the payments, most likely that'll all occur in 2020. And most likely it's obviously, like Steve said, it's 3-point-something million. It's in excess of the single audit requirement. So it'll be part of our single audit this year. The second phase, which is the reimbursement of institutional expenses, they haven't talked about how they want to address that as far as, is that part of the CFA, you know, that sort of thing. We're still waiting to get some guidance on that, whether that's another phase that we'll have to audit when the time comes, whether it's in 2020 or 2021. It really just depends on the timing of when you're going to, you know, draw down on those funds and versus, you know, expending them, that sort of thing. So we'll have to talk about that sort of the timing of that. And also when it comes down to it, whether that's part of the schedule of federal expenditures or not. We have received.
Now, wasn't I understanding, Steve, we've accumulated, some of that institutional aid is really, we accumulated expenses that have already happened. And so and that institutional aid is,
You know, I would
based on
actually,
that? Or am I misunderstanding that?
actually, I'm going to ask if Brenda or Wayne could speak to that specifically, because as I know that, you know, very early on, we set up several fund codes to both track time and expense, and then just supplies and equipment related to coronavirus. I don't know if we actually provided that as the basis to pull down some of that institutional aid. Brenda or Wayne, could either of you speak to that?
Yeah, so we have not drawn down any of the institutional aid yet. We were
Okay.
kind of waiting until we heard how much of the state support was going to cover the FY20 expenses we've had. Because the CARES money is available for a year and we could use it in FY21 if we are
right.
covered by the state in FY20.
Thank you for reminding me, Brenda. You did say that the CARES Act has a longer fuse.
Right.
And so it behooves us to kind of conserve it. Thank you.
So
But the state, some of the state money, we may be drawing down, and some of that, if I've heard correct, you said the state will be using, giving us funds from their federal funds, so it would be pass-through.
pass through, yep. Yep, so we'll have to look at that as well. Yep. So far, we've been provided a preliminary CFA, which is estimated through June 30th. So based on that, we've made our initial selection of audit programs. Ultimately, student financial aid ends up being part of it because it's so big and we need to make the coverage. So as much as we try, you can't get a pass on student financial aid. But for all the other programs we've audited in the last 4 years or 3 years, they allow you to essentially rotate. So we've rotated in some new programs, one of those being the CARES Act and a couple others. And then based on how many programs you're rotating, they make you rotate some lower level funds as well. So we've rotated in some new funds as well that are below the threshold, but make us get our requirements, that sort of thing. So we've provided those listings to Brenda, who's essentially accumulating those expenditures for us, and we'll start picking those samples as well while we focus on the student financial aid, which tends to be the most cumbersome. When you look at the compliance supplement, which tells us how to audit it, it's essentially, 19 different sections with, all these different steps that you have to do in all these different areas. So getting
It's not out yet.
No, we're basing it off last year for right now, just to get it going. But once you get student financial aid out of the way and get comfortable with student financial aid, that gives you a big chunk of the way through. And then other programs as well are generally smaller in stature. Things like Title III are usually mostly disbursement type programs, and you're just checking against disbursements, whereas student financial aid has eligibility, disbursement, return to Title IV, these calculations. So there are a couple programs that are close to the threshold that right now they're estimated to be under. If at the time we get the final CFA, if they end up being over, we might have to select additional programs. But right now, we're relying on the estimate saying it's going to be under. But in the off chance that there's more expenditures in this period for those programs, they will be over and we'll have to pick another program to test. But for right now, just to save cost and money for you guys, we don't want to do work that essentially isn't going to be valuable unless it's necessary. But potentially at the end of this, we might have to do some quick work on an additional program to meet the requirements. So new GASB pronouncements. There's none in effect for this year. A lot of the stuff has been extended, even for the ones that are coming up. Leasing standards and some other ones. Revenue recognition we'll have to account for. But a lot of the other ones that are more worrisome, like the leasing standard, have been pushed further out because of everything that's going on. So thankfully, that gives us a little bit of breathing room with that stuff. But we have started implementing that with other clients. A lot of publics and private companies have had to implement already. So we've had experience implementing those programs, those requirements already. They're not fun, and they make the balance sheet look a little bit crazy. But thankfully for you guys for this year, as far as what you need to worry about, I think there'll be specific guidance around disclosures, regarding COVID-19. There'll be things we'll have to disclose and have to deal with, especially with appropriations. If you're getting additional appropriations through that, we'll have to make sure we spell that out so the reader understands that. One area that we talked about preliminary with Steve and his staff was, we'll have to, because of everything that's going on, there's always a going concern, more so this year than any other year. You know what I mean? This is especially in your industry, this is a very difficult time. You know what I mean? Financially speaking for the institution. So right off the bat, going concern is a priority to address and understand. Now, thankfully, things like additional appropriations helps mitigate some of that. So we'll also have to look to see what your plan is, budget-wise, debt-wise, things like that, and make sure that, there's enough in place that we can say, okay, we don't have to do a going concern disclosure. You know what I mean? So ultimately, we don't want that. That makes it seem like, you're in a tough straits, and hopefully enough things have happened that you're not, but we have to make sure that those things are in place. If not, potentially you might have a going concern disclosure. But hopefully with things like additional appropriations, budget savings, that sort of thing, and things like that we can have enough in place, enough documentation in place to say, okay, we don't have the disclosure, but essentially you would speak to that maybe in the MD&A or along those lines. If it's significant enough, ultimately, public perception is that obviously higher education is struggling across the board for everybody. So you don't want to assume that, telling people that, don't worry about it, there's nothing here, but you can say, yes, it's difficult, but here are the things we've done that essentially mitigate these things. And that's where you could talk about that in the MD&A. From a financial statement disclosure, as long as we're comfortable that from the date of issuance, you can operate for 12 months. That's really the going concern audit requirement, is 12 months from the date of issuance. So that's where our audit judgment has to go against, making sure that for the next 12 months, you're gonna be able to meet your obligations and that sort of thing. So that's what our audit focus will be, but also you have to deal with the perception of it, and that's where you can talk about it in the MD&A. And that's where I think, like I said, the MD&A is going to be very key function this year. Not only translating the financials for a layman, but also talking about the future and things like that, especially, like I said, where hopefully in the next summer months, we'll get a better feel for the fall and what the impact is going to be, and how that really, hopefully it stops, the impact for you guys stops, and we get to a new semester, and it normalizes a little bit, and we get a little bit out of the red. But we'll have to sort of see and address that as we go. The going concern discussion is going to be an ongoing discussion because it's very fluid. with everything that happens. Every new piece of information, every new variable changes it a little bit. So like I said, in the next summer months, when you figure out what's ultimately going to happen in the fall, that's going to be a big piece of the information, which really tells you, financially speaking, what is our outlook going to be for the next 12 months after, essentially October 15th. And
Can we pause for a moment, Steve? Do you have anything you want to add there, or does anyone have a question? First, you, Steve, do you want to add anything there? You don't have to.
No, actually, I really appreciate that, because if we didn't, I was going to make sure that we covered this before Keith and Christopher left us. And I appreciate that. Actually, Keith, Christopher, Brenda, Wayne, and I had about a 2-hour-long conversation back on the 23rd of April, which of course is an eternity ago. And we had a much different sense as to the seriousness of the going concern. Not that it doesn't continue to be serious, but given the, I don't know how else to characterize it, overwhelming amount of policy intervention at the federal and state level, or potential policy intervention, I certainly feel a lot better about, our ability to address a period of time that would stretch from mid to late October of 2020 to mid to late October of 2021. If I read that correctly, basically from the date of issuance of your opinion for 12 months, we need to demonstrate financial viability. I think that it sort of has overlap with the Finance and Facilities Committee, where, at 1 o'clock today, we're going to sort of talk about, among other things, what our budget development plan looks like for FY 2021. And I anticipate we will be taking multiple passes at that over the course of the summer. And then combined with the reconvening of the General Assembly in sort of the August-September timeframe, plus the landing of whatever class we end up landing, whether it is an entirely remotely instructed student cohort or whether it is socially distanced in-person education, I think we'll have far, far more clarity on what our operating outlook will be for the balance of fiscal 21 about 3 months from now. And so, as I recall, Keith, there may have been a circumstance where we would have had to basically deliver a separate report with a plan to operate to satisfy O'Connor and Drew, absent these extraordinary interventions and absent this level of clarity, we would have had to deliver a report to you, to address the going concern issue.
correct. Yep. Yeah.
Okay.
You essentially, as the management, would have to tell us what mitigating factors do you think you can look at for the next 12 months that would essentially say, we're not a going concern. Now,
Okay.
like you said, a lot has changed since we talked before, and essentially all this additional appropriations really is a big factor that helps mitigate a big chunk of it. But we'll also want to speak about, your budget for next year. What's the outlook? And like I said, when we get a little bit more information about the fall semester, if things on the poor side, obviously we'll have to talk about how much does that appropriations really sustain you. Hopefully it won't be. Hopefully it'll be good news, and essentially, things will be a little bit more normal, maybe down a little bit, but that can be, mitigated through very simple means and not necessarily a huge change of events that would require, something along the lines of, we're still going to be, stuck at home and everybody's going to be taking online classes in the fall type of thing. So I agree with you. I think right now we're in a lot better place than we were a month ago, as far as the going concern. But we'll also just have to confirm that as we continue, that nothing else changes that significantly impacts it. And then we'll also probably get a couple more pieces of information, like I said, the 2021 budget and things like that, just to document that, again, essentially that there's our concern isn't mitigated, that it doesn't require disclosure, it doesn't require a going concern opinion, that sort of thing.
And to the extent that all of that can wrap up towards sort of the middle end of September, I believe that that's with sufficient lead time for O'Connor and Drew then to deliver our audit, assuming that we're still on schedule for the kind of middle end of October.
Yeah, that should be plenty of time.
Right. Although I did hear that is somewhat dependent on making sure making sure they have a plan for making sure the notes and the financial statements get drafted. And if you can't do quite as much in-house as in the past, that you're letting O'Connor and Drew know you need some assistance in some areas.
Agreed.
And not leaving all of that to the September period, but getting what you can get done.
Absolutely.
Are there any questions from any audit committee members or anyone like that on any of this right now? I want to give everyone a chance on a regular basis.
Not for me.
Okay, I don't see any hands waving. Church, go ahead.
I'm not a member of the committee, but
Please.
Kevin or Keith, rather, it might be helpful if you have a layperson's just a pamphlet or a page that would be a layperson's description of what going concern is all about.
Sure.
Because I could anticipate that if, like, for example, when the audit committee reports back to the full board, as soon as Linda starts using that phrase, there may be some people scratching their chin saying, what does that mean? So if you do have some kind of a lay trustee's explanation of what it's all about and what the implications are, and how the matter is resolved and things like that, I think that would be very helpful.
Okay, sure. Yeah, that's no problem. I'll send that out.
Appreciate it.
Good question. Do you, Keith, Chris, have anything else you need to, or want to be sure we've got addressed?
No, I mean, I think that's the majority of it. I mean, my thing to the local staff and management of the school is any recommendations to make things easier for you guys, please let us know. We want to learn from the experience. We tried to learn from last year, but last year, like I said, was a little bit different. You know, the way we're making requests, the way we're setting up meetings, that sort of thing. We want to make it work as much as we can for every individual at the college level. We don't want to make it inefficient or feel like, you know, we're being too demanding as far as stuff. So any feedback you might have, let us know. We want to hear from it. We want to sort of, you know, be flexible and learn from it. So I always appreciate feedback when we can get it, especially with something new like this. So anything like that, please let us know.
Okay, so I'm really hearing you want them to like let you know if they can't respond right away, or if they need to shift.
Yeah, if we're not giving them enough time.
Communicate.
Yep. If we're not giving enough time, if it's easier to set up calls in a certain specific, you know, period than what we're trying to do, that sort of thing. If email is fine with them, that sort of thing. So, you know, any recommendations is always helpful, especially, like I said, when we're doing something new like this. And that face-to-face sort of loses something sometimes. So we want to make sure we're not losing too much, and we're not being sort of, you know, in the vacuum of space, you sort of get very demanding and not trying to be. So we want to make sure it doesn't come off like that or end up, you know, upsetting people's daily, you know, work habits as well. You know, because working remotely, everybody has a different habit now. So we'll sort of.
I appreciate that. I think we all, and I'm sure the staff too, will appreciate your openness and your willingness on that, because working remotely is different. Plus, there is a lot going on. Steve, do you have anything else you need on want to ask on the audit, or anybody have any questions related to the audit right now? No? Okay, then let's, is there any other business we need to address then in the next agenda item? Clearly, we have heard that the internal audit regarding controls over payroll has, understandably with COVID-19, did not happen. So that will be a future issue and things. Anything else, Steve? I don't have anything else.
I would just say, I mean, you know, under the rubric of other business, and this has no bearing whatsoever on the engagement with O'Connor and Drew, but just so that the audit committee is not hearing it for the first time in October, which I think is the next regularly scheduled committee meeting. So this is actually the last of the 4 years of O'Connor and Drew's engagement with us. And so, at some point, we'll just need to figure out, the correct avenue, whether that is a request for proposals or, an extension of the contract, which we're allowed to do under VSC policy 429 for a period of up to 3 years. Again, don't want any bearing, any influence at all, and I know it won't be, but I just wanted the committee to have the benefit of knowing that that's just an item that will come up on a future agenda.
We look at various factors as far as
Right.
skills, what's going on in our staff's lives. Definitely COVID-19 and how that's impacting us will all have an impact, and the committee will continue to use those skills and other factors to make that decision when the time comes. Anything else? Can I get a motion to adjourn then?
So moved.
Thank you, Dave. And a second? Lynn, just
Second.
thank you, Lynn. All those in favor of adjournment, please indicate by saying aye.
Aye.
Aye. Any opposed? All right, thanks.
I'll second.
Thank you. And we just stay on this and move into another committee meeting. Is that how that works, Yasmin?
That is how that works.
Okay.
So, yeah,
So Christopher, Keith, I thank you very much for your stuff. And Yasmin, I'll have to let somebody else do anything because I have to run to another meeting before I come back and join you.